One of the most interesting currencies to watch right now is the euro. The euro is eyeing its two-year low and certainly looks like it wants to move towards that level. Today, it came under selling pressure despite better than expected Eurozone confidence numbers. It definitely seems like a part of the country, the economy remains optimistic, even though German business confidence and investor confidence has weakened. The euro should have also traded higher because we had softer U.S. data, but none of that happened. And the reason is because investors are worried. They're worried not only about the outlook for the Eurozone economy and the fact that we're moving into a very low and possibly zero growth period for the Eurozone, but they're also, in the near term, worried that next week when the European Central Bank meets, they're not going to have anything good to say about the outlook for the economy. The ECB is going to provide the details on its targeted long-term refinancing operation, and it could be generous, and if it is, that's going to be negative for the euro. But more importantly, we're going to hear from ECB President Draghi, and if he basically kind of increases the level of dovishness within the central bank, that could easily drive euro-dollar to 110. Now, with that in mind, though, the euro and Eurozone data and the ECB meeting isn't the only things in Europe's calendar. We also have the U.S. non-farm payrolls report. With regards to USNFPs, we had a very good report in the last month, so a bit of a retracement is expected. So we could have a situation where we get some euro negative news as well as some US negative news and dollar negative news that leads to a bit of a tug of war in the currency. But at the end of the day, though, the Eurozone economy is definitely suffering harder than the U.S. economy. Those German labor market numbers that we had released this week, which was the largest increase, I believe, in 4 years, shows the initial signs of a slowdown in the in the Eurozone economy. So that really is going to weigh on the central bank's sentiment. So I think that, at the end of the day, the outlook for the Eurozone is worse than the outlook for the U.S., and Draghi, could very well express his concerns about the impact of slower U.S. growth, slower slower Chinese growth, and all of that could, really push the euro-dollar towards 110. But if we get a good U.S. non-farm payrolls report, then we'll truly have that tug of war where, U.S. Data is slowing, Eurozone data isn't great, and it's really about, where positions are at the moment. And right now, the market is still very much bullish U.S. dollars, long U.S. dollars, and if we get a softer NFP release, we could see quite a bit of a short squeeze in the euro. So either way, it's going to be a big week for the euro dollar, so keep an eye on the currency because it will be on the move.